Well, hello again, traders, and welcome. This is Sankit from Maverick Currencies here, and we are back with another update on the Japanese yen outlook, where we were going to break down the yen cross. We'll take a look at, most importantly, the dollar yen, talk about possible Bank of Japan intervention that's almost coming in the news here, and we are now getting closer to a key Bank of Japan press conference and the monetary statement that's also coming up next week as well on September 21st and 22nd. So there's a whole lot to talk about here with the Japanese yen here. So let's just take a look at where we are with the yen and what we need to kind of focus on in this upcoming week here, as the Bank of Japan is likely to provide either some guidance or some intervention, which could be a bit of a game changer for the dollar yen cross, especially as you can see, we have actually now gotten up to the 90.98 highs. So 145 is acting as a nice little highs over here. And if we take a look at the daily chart, we're actually finding around that level. You can see that we haven't really gotten above that 145 and just kind of stayed below that level. So this is where I think $1.45 is a very important key level resistance. And as you can see, back going to 90.98, we barely got above that, and then after that we got a nice little collapse in this currency pair, and then we had the Bank of Japan intervention that really caused that little downward move there. So are we in store for something like that, or are we in store for another big breakout? Which again, if we get above that level, you can see that the next level of movement will be right around this highs over here back in 90.90, and again that's at 159. So I know traders that have been trading for even last 10-15 years, I mean, you're talking about things that we haven't seen for the last 20 to 30 years here. So this is where I think we just have to use or be in line with that expectation here and not to overshoot that target. I think we are at a very strong target here of 145, and the fact that we are getting some rejection here, and we are also getting some news from Bank of Japan about verbal threats of a possible intervention. Again, this is where it starts. I think that $1.45, anything above that will be a bit more of a concerning area for Bank of Japan. And if the pair continues to go higher above that level, I think it could be troublesome for the Bank of Japan, and I think that's where we could see some intervention come in place. But again, this is also getting close to the Bank of Japan press conference next week, and this is where I think we'll have to look at the yen and then look at both case scenarios. I mean, so if you take a look at the yen right now, as you can see in the last 24 hours, overnight we did get some comments from Bank of Japan. Again, citing some threats for the Bank of Japan intervention. So I think if that's going to materialize, again, if the markets are responding to it, that's a good sign. We haven't really collapsed altogether. I mean, last night we actually got that little jump up. As you can see that we actually got up very nicely here, percentage move from the bottom over here to the highs over here. That's a nice little 1.5% move from lows to the highs. So this is a good sign. I think on a 4-hour chart is shifting that momentum, and the good thing is that it's actually staying above that. So I think in the shorter term we could see the Japanese yen rally a little bit, but just realize that in the past we have seen a lot of these rallies that just failed. But one thing to point out is that when these rallies happen, there could be a lot more sort of push in that rally before it fails. I mean, let's use July as an example, and as we zoom it in, we can see that we got a nice little reversal here. Small basis, rally, small pullback, a rally. So we had a very nice little continuation that lasted from July 27th till August 1st. That's a 4-day move, and in this whole yen, again, we're looking at it as a currency basket, meaning all the currency pairs, the yen cross is equally weighted. You can see that was a 4 to 5% move. So we actually just got a nice little 1% move here. But again, if this is the area it holds and it actually breaks out, I wouldn't mind looking at this on a further breakout. Again, this could be a little different for traders that are only trading in one side. But again, if you go back in time, I think the yen is at an interesting point here and we could see potential some runs over here, even though they could be just bear rallies. But I mean, if you look at the daily chart, we are still far away from the 20 to 52 moving average, and it's common to see these these bear rallies that to come in play, and that could last for a few days. Now, ironically, this is happening ahead of the Bank of Japan rate statement next week, and also with some comments from Bank of Japan about the intervention. So let's break down some of the crosses that we need to pay attention to. Dollar yen 145, I think, is a level of resistance. As you can see that over here, we did rally up to that level, pull back, try to break out again, but did not, and then just pull right back through. So I think at this point, the breakout point was about 138 to 139. The level of resistance is here. So I think this, I'm not really looking to buy or this dollar yen pair until if it does break that. But I think I don't really like this yen short here because there's a bigger potential for yen to reverse if there's any intervention or any sort of any changes from Bank of Japan, which again, I know a lot of traders are thinking that might not happen. But remember, the biggest move happened when the markets are not pricing in the reaction. So I think that's where we just have to look at the pros and cons here. Now, looking at a lot of the other yen crosses, and I think this is where I would like to pay some attention to, is that some of the yen crosses did break out and actually just fallen back. With pound yen, you can see we have a nice little resistance at about 167. It pulled right back there. So we don't have a breakout in the pound yen. The CAD yen looks more directional. It did break out at 107. It's sitting at 108. But as you can see that after spending some time up here, it's just pulling back a little bit. Now, Euro yen, we got a failed breakout here, got up to 145, pull back. Aussie yen, which is slowly pulling back to the previous breakout point over here. So there's a lot of these yen crosses. I mean, we have Kiwi yen that's actually fallen back there. So, and I think this is where using right strategy for this, it's important, and you picking the right pairing for it is important. We have Swiss franc yen, which have almost gone parabolic over here, and we're getting a pretty nasty candle up here. So a lot of these yen crosses are down about 100 to 200 pips based on the pair that you're looking at. The question is this a pull back to buy into, or maybe for the short term, the move is kind of done for a bit? And I think I'll take a bit more on the cautious side here, citing all the concerns that we talked about earlier, the intervention and the next the statement coming up. So I think meanwhile, the yen could be a bit more of a volatile currency, which means that it could be stronger one day, it could be weaker one day. But again, if you're looking for an ultimate collapse of the yen, I think that could be a little bit late on that. I mean, this is where using a 4-hour chart, for an hour to 4-hour chart is what we can use, and you can see that on an hourly chart here, the Canadian dollar, Japanese yen did pull back, rally a little bit. So it's showing me some signs for some sort of reversals here. Not in the dollar yen, because remember, dollar is one of the strongest currency out there. But again, if you're trying to go with the yen move, I think CAD yen looks good over here. Now, a lot of these yen crosses, if I pull on an hourly chart, they actually now setting up for a nice little bear rally. So I think these are nice setups. So just making sure that you're picking the right pairing is key. And we're getting nice little bear rallies over here. We did pull back, bear rally, pull back, a bear rally. So at this point, I had a lot of questions. What should I do with the yen? Because it's very easy to, get chopped up with volatility. But one thing to keep in mind is, where's the next big move? That's the first question we got to ask, is where's the next big move? And at this point, I think the yen has a bigger risk onto making a reversal than continuing to the downside. But again, we don't want to get ahead of our time and get ahead of the trade here. I think we could be just in a little period of back and forth until next week. Just keep that in mind. And if these levels hold, I would say just go back in time and look at July setup. The July setup, if we start to get something like that where it does rally and then it does pull back and then rally a little bit. I mean, you can see that on these daily charts over here, or a 4-hour chart. I mean, that's the kind of setup that we're looking for. I mean, here we go, right here. This is the kind of setup we're looking for if this is continuing to the upside. So a nice move on the yen today. It's holding that level. If it does break out, I think we could have a little short-term trade to the upside, but making sure that you're using the right pair for it instead of just going with the dollar yen. I think dollar yen might be the last one to turn, but meanwhile, we are seeing other currency pairs that are already turning that we can pay attention to. So till then, we'll keep everyone posted and stay cautious on the yen. Till then, take care.